All right, we will be starting the session right now. Thank you guys for tuning in. Today's session is on NFP. NFP is non-farm payroll, which is a very high impact event. It happens at the end of the week, end of the first week of the first month. So it's the Friday of the start of the first month. It is one of the largest or most volatile news events that exists in Forex. So we want to pay quite a bit of attention to this event. Now, I personally have traded many NFP events, and even though they are quite volatile, not every event is the same. So before I get started, let me know if you guys can hear me. Let me know if you guys can hear me in the chat. Alrighty, it looks like everybody can hear. Okay, so NFP, the most volatile event of the month for the most part, it affects mostly USD based pairs, so the majors and CAD. So if we go to Forex Factory, Forex Factory calendar, we can see when this event is going to occur, exactly when this event will happen. So on my Forex Factory here, we can see I have the events filtered to expected impact the highest. Okay, I've applied that filter. I don't really care about any of the other events except for the higher impact ones. Now, I personally do not look at the data. I'll say that again. I personally do not look at any of this data that comes out. Now, apparently, this is the most important stuff to look at. However, my belief is, how am I supposed to have an edge when there's millions of traders looking at this same information, pressing the little refresh button here, refreshing all at the same time, waiting to get the same information? So you have no edge if you're trying to trade with the same tools as the majority. Now, on the other hand, if you take market structure into account, you can decipher the news before it actually happens, because there's always there always has to be that buyer, seller, and supply and demand reverse psychology. So if we can take this, for example, we're looking at the dollar index right now. We have an uptrend. It looks like we're obviously on the daily chart. We have a very, very large uptrend for the past, how long? Over a year now. Since the start of 2018. So this uptrend has come to a stop at 97.5. So it looks like the dealer, market maker, this advanced algorithm, whatever you want to call it, is trapping orders, trapping liquidity at where? At this range, 97.5 area. Why is this? Because you can take a support resistance line here, draw it out, and you can see each time that this machine or this dealer is spiking through this price level at 97.4, 97.5, right in this level. They keep trapping liquidity at this level. So if we look at the past, we can see when price gets to this level, it normally reverses. And it looks like price has not been able to break this certain price level. So we're looking for different types of confirmations here along with market structure. Now, we like to look at macro because if we look at macro, we can understand the larger picture. But if we also look at the micro, we can also understand the smaller picture as to get a better entry. So I have circled here and written micro complements the macro. So if we look at the 4-hour chart here, we see what looks to be a head and shoulders pattern. This head and shoulders pattern is a micro pattern within the macro, what looks to be a head and shoulders pattern as well. So the micro a lot of times complements the macro. Now, why am I talking about this? Why am I saying this? Because it looks to me like the same thing could be playing out in a very large scale right in front of us. And what could be the catalyst to this large move? Maybe NFP, right? So, what can we expect? Are you guys all along with me now? Can you guys hear me? Let me know in the comments. Let me know in the chat. How does this look to you guys? So, I personally like to look at the macro first and then the micro. So the macro, it looks to me personally like we have a large recognizable pattern, a head and shoulders pattern. Now, I have discussed about how the dealer or these institutional traders need liquidity, right? The banks, the hedge funds, they need liquidity from dumb money to be on the other side so that they can either buy or sell in mass quantities. So this, for example, the past 2 weeks or so, it looks like the dollar index has been on a nice uptrend. Now, we have been met with a high at 97.4-ish area, right? It's almost practically exactly where we put our major trend line here, or major support resistance. So we can also look at what looks to be the micro head and shoulders, the left shoulder and the right shoulder here, okay? Now, if we are expecting a drop, if we are expecting a reversal of the trend, correct? We may expect, if the dealer needs more liquidity, a stop hunt past the high of the previous day. So here's the high of the previous day. It looks like this is going to be the Asian consolidation range. And we could see for NFP a stop hunt, a large induction to the upside first. Why is this? To grab the liquidity that is needed for the institutional traders to sell, to place their sell orders. So once that induction happens, which they may break out of this 97.3, 97.4 area, they may break out of this area and induce via a wick or a large stop hunt candle, induce retail traders to buy upon this breakout. So if this breakout does happen, this may in turn give enough liquidity for the sell-off for NFP that we're hoping for. Now, this sell-off would include a micro, right? A micro pattern within what we have a macro pattern. So we have the micro complementing the macro once again. And it's all during NFP, okay? We could see NFP as the catalyst to this move. Now, to have a better idea, to confirm to us that this could actually happen, what we're going to do is we're going to look at some other different pairs. So we're going to take a look at dollar Swiss franc to see if we can see any correlation here. Actually, let's take a look at Euro US dollar for a moment. I noticed this yesterday, a beautiful, what looks to be head and shoulders pattern as well. Now this would be inverse to what we just looked at, right? Because this is the euro and we just looked at the dollar index. So if we're looking at the Euro US dollar, we can expect the exact opposite. Now it looks to me, we're on the daily, we're on the macro chart, like we have a large zone right here. A very beautiful zone that we can stretch out right here. And in this zone, for the past few days, what we notice is wicks being thrown into this zone. And it looks like what looks to be a smaller head and shoulders pattern happening right here. So a few more confirmations. Let's look at gold. Gold actually had a beautiful stop hunt to the low. This massive induction, which makes me believe that we're going to see a rise out of gold for NFP. We can see, I touched upon this in my last Forexia live session, how the institutional traders, the smart money, try to induce to do the exact opposite. So in this case, they induce the sell so that they can fill their buy orders and price reverses the complete opposite direction. So this structure took all week to happen, even a little more. And this massive liquidity grab will most likely be the anchor for a reversal of a trend. Going back to Euro USD, we can see our Asian zone, Asian consolidation. And what we could expect is a breakout to the downside for a reversal upwards, right? Just like we saw with gold, that pattern, that same consolidation, breakout induction, reversal, right? So it's the same concept. Consolidation, breakout, induction, reversal for NFP. All right, let me know if you guys are understanding this. Let me know your thoughts on this. All right, beautiful. Makes a lot of sense. Very clear, pretty clear, mind-blowing. Alrighty, beautiful. I'm glad you guys are understanding. That's the most important thing. Once again, this is being recorded, so it will be up on the Academy within the next few days for you guys to watch over. If there are any last questions, this will be a quick. This was just a quick analysis. My computer's actually about to die, so I'm gonna take one or two more questions, and I'm gonna wrap it up. So I will be sending to the Academy my pre-analysis for NFP on a few different pairs. You guys already know my bias for the most part, so thank you guys for tuning in once again. Let me pick a few questions here. Could they just rise without the large stop hunt? They could rise without the large stop hunt. However, in my experience with NFP, a lot of times there is a stop hunt. So if you see that there is a stop hunt and you expect it, that's the best part. That it actually goes with your plan. Any other pairs of high interest, I'll be sending the pairs, my analysis, to the temporary Telegram group. So for the most part, it's USD based pairs. The majors, gold, CAD, Canadian dollar, the stop hunt induction most of the time happen before news. A lot of the times it'll happen during news. That'll be the catalyst to the move. All right, you guys, my computer is about to die, so I'm going to pass the host to Brandon. He's going to take over. Thank you guys for tuning in. Everybody have a beautiful, wonderful day.
All right, what's up, people? I told y'all that I was gonna be back sometime this week. I told you guys, I said it. I don't know who listened to me, but somehow I just always end up back here. You know what? I love to do this, all right? I love to speak to you guys. And, you know, I feel like, you know, this is like a part of me, just these live sessions, because it actually brings so much joy, you know, for me to be able to share what I think about something and people actually tune in to listen to it. So enough about that. I'm gonna stop sharing Dylan's screen now and I'm gonna share mine, right? I'm just going to, is USDJPY already stop hunting? So let's kind of check that out very quickly. I'm not gonna stay long. I'm not gonna stay too long. Is USDJPY already stop hunting? Yes, definitely. All right, definitely. Now let's zoom out. All right, well, we already know what the bias for UJ is. All right. I do believe UJ sells. All right, and excuse me. But this isn't really what I want to talk about. I want to actually go over 2 trades that I took today. All right, and I feel like we can learn from, you know, experience, right? So let me just come out of UG. Let me just close all these things. Boom. Delete. Right. So the first trade I took was on AUDCHF. Right. And why? Now, the moving averages that I'm currently using are the 96 and the 288. And later down in Forexia Live, you will learn why these moving averages are the moving averages that I'm using, not from me, but from Human, right? Which is a new mentor. He's actually trained by myself, Dylan, a few others, and he's actually created something that, you know, is ridiculously powerful, right? Now I can use the same 14 and the 50 that I would usually use in accordance and in combination with structure, but these moving averages have proven to be really, really powerful, right? Now you can maybe try and go and put them on your chart, but you're still more than likely going to use them wrong because there's a specific way to do it, right? There's a specific way to do it. But long story short, let's just check it out, right? So we know days of the week, right? Days of the week. Today, well, this is actually Friday, so we're just going to put it here. I want to put it so you guys can see. F, Friday, T, Tuesday, all right, W, Wednesday. Can everybody hear me properly? And see what I'm doing? Can everybody hear and see what I'm doing? Beautiful. All right, T, Tuesday, and then S, Sunday, and then M, Monday. All right, Sunday, Monday. So check this out, right? We know structure is key. So the weekly cycle, right, and my mouse is wigging out, but the weekly cycle actually begins here, right? And what happened? So Sunday, Monday created this high, and then Tuesday reversed off of that high, right? With a stop on, this was definitely news, right? Even from the prior week, AUDCHF was in a obvious uptrend, right? So you can see why it would have reversed for news, right? So it reversed on Tuesday off of Sunday, Monday's high, right? Is that clear? That's supposed to be clear, right? Then Tuesday, it created downtrend all of Tuesday, and then created a low on Tuesday. So the range for Tuesday alone was about 70 plus pips, right? Tuesday had this big downtrend here. So more or less where it started the week before, on Wednesday the week before, it basically almost got back to right there. Now, what happened? It actually created a W pattern on Wednesday, right? Off of Tuesday's low. All right, do we see this? Do we see the W? That's supposed to be clear as day, all right? Ray Charles supposed to be able to see that, and he blind. You understand? That's clear as day, all right? And you know that it's a W because price just ran away. Now, here's the thing. Now, my style of trading, I'm primarily a scalper, but my style of trading is, is mainly used as like training wheels. When you're now learning to ride a bike, you're probably about 8 years old, 6 years old, 5 years old, whatever, you're now learning to ride. You have those wheels at the back, that stick out to the back of your wheel, your back wheel. Basically, those are to help you, understand what balance is. My setup called ECR is actually that, right? And you know what? It's training wheels, but it's also a handicap that I use because it gives me an additional confluence. Now, maybe I would have missed this down here. Maybe I didn't. I wasn't too sure if it was a W pattern. Maybe I don't know. Maybe I just wanted a next confluence. But I know it's a W pattern because what happened at the end of the W? Price just ran away, right? And we see that price just ran away. So I know it's a W pattern. Now I have a saying that the most profitable ECRs happen after a M or a W. So we have a W pattern here. We have the cross of the moving averages, which is the 96 and the 288 in this scenario. And then ever since that, price has been in respect of the moving averages. Every time price come back here, it just come back. It just running back away from the moving average every single time. All right. My entry was actually right here somewhere. I don't know what's going on with my mouse. All right. But my entry was right here somewhere. Well, right here. All right. Seller buy candle, buyer sell candle. This is an uptrend. So I'm definitely looking to buy. It's an uptrend after a W. So I have even more reason to buy. And then price respecting my moving average. I mean, it's clear as day. Long story short, my entry was somewhere here. I had a 10 pip stop loss originally. And even after the fact, listen, the best possible entry would have been all the way down here. But even after the fact, I still have the ability to yield a trade with a 10 pip stop loss that would not be hit and that could still give me well more or way more than, 1 to 2 risk to reward. You understand? This is what, I do. And this is why, it looks like I always have the ability to produce a trade every single day. But I'm primarily a scalper, and that's what happens here, right? I'm only taking this for one, maybe 10 pips, 20 pips, 7 pips, 5 pips. I'm taking what I can get. You understand? So I closed this and I took it, I closed that in profit and I'm good, right? The next trade that I would have taken is USDCAD. Same thing. Structure first, right? What do we know about USDCAD? Right? Let's break this down very briefly, right? So weekly cycle or the weekly structure starts here. Sunday, Monday, it goes all the way to Friday. But from the prior week, right, you can tell that obviously price has been in an obvious downtrend. Do we see this? Come on, people, wake up, right? It's an obvious downtrend, right? And at the bottom, price created this peak formation low on Sunday, Monday, right? Came back up, and then, well, you can say that price is in respect of the trend there, right? Literally came back down on Wednesday and retested, right, the low on Sunday, Monday, and created what? A W pattern. Do you see the big W? This is what it's about, people, right? This is what it has always been about. So what happens after the W? The ECR, right? So if for whatever reason I didn't trust this W pattern, if I missed it, whatever, Brandon still has an entry by virtue of using this, the ECR. Price is in an uptrend due to the fact that the second leg has definitely been created. The trend has been broken, right? So therefore, I know that more than likely price is going to go up. I'm not sure how far, but I'm a scalp. I'm not expecting price to reach all the way back up here. I can get in on, and let's zoom in. Let's go into these candles here. Look at this. Price has never once, maybe right here, once, breakout, fake out, right? Once having disrespected or violated my moving averages. Once. Every other time, price has respected. So what I would do in a scenario like this is any red candle that comes close to my moving averages that do not break below are entry candles. I have one here, I have one here, one here, all the red candles, because I want to buy a sell candle. I want to buy these candles because these candles are not breaking, right? And you're basically buying low because the red candles close low. Let's use the highest possible entry and see if I could have yielded a 10 pips stop loss safely. 10 pips, let's see. It would have stopped me out if it is I use 10 pips right here from this candle. Let's use the lowest possible entry right here. 10 pips safe, and it would have yielded just almost about 20 pips for me. 2 trades are really taken today, in and out, and I'm good. I'm still using structure. I'm still using what I know about the weekly cycle, daily cycle, what happens during the day, what happens during the sessions. All of that still stands, right? This is just my way of combining what Forexia has established in my brain, all right, in accordance with my training wheels, which in this case are my moving averages. Does that make sense? It's not, so in other words, it's not just a EMA crossover strategy that you go on YouTube and you learn. No, you have a lot of stuff to take into consideration when you're really utilizing my style of trading, right? You have to understand what Forexia teaches first. You need to understand structure. You need to understand what the weekly cycle is, what the daily cycle is. You need to understand those things, and I hands down 100% endorse what Forexia teaches. Before I would tell you to understand that before even considering, right? Considering trying to utilize what I teach. Now I do teach it, right? I do teach it, but a lot of the time, what a lot of people do is they just decide, you know what? Well, the moving averages cross, so price looking like it's in an uptrend, so I'll just buy. Well, that's the most dangerous thing you can do. So understand structure first, then you can utilize the ECR. People, NFPs tomorrow. Those of us who are not 100% confident in our ability to trade during a news event as volatile as NFP, my advice to you is to either demo or stay away, right? It is a very dangerous time, right? It's actually the second quarter. April is the beginning of the second quarter of the year. I was actually telling my students this. This is just my speculation because I'm trying to think like the dealer and the retail traders. My speculation is you can see a more than usually aggressive move, right? So I'm more aggressive than usual move. Why? The dealer or institutional traders, banks, whoever, they have quotas, right? They have quotas. And if for some reason they didn't meet their quota in the last quarter, when do you think they're going to try to take it back? You feel me? Do you enter mainly from MAs, or you see what I'm saying? So this king greatness, that's kind of what I'm saying. No, I don't. I use structure first, right? Structure first. People, this call going to end now, right? So if you have any questions, feel free to come message me, right? But the call, I'm going to close off the call now. I hope you guys enjoyed. We apologize for it being so short, and safe trading tomorrow, people.